Hello, everybody. Thank you for joining us for the panel today. We have about 20 minutes to be with you today, and our goal is at the end of that 20 minutes, you've gotten a good overview of the opportunities to invest in the circular economy. You're going to hear today from two active investors in the circular economy. So if you're wondering, are there opportunities, are people investing? You're going to hear from two folks today who are active investors in the circular economy. So I'd like to get started by introducing Emily Landsburg and Erika Karp. If you could please come out. And the way we're going to run our panel today is we're going to do some Q&A with our panelists for about 10 minutes. And then in the latter part of the panel session, we're going to do an open Q&A. So if you have questions already that you wanted to ask about investing in the circular economy, write them down, get them to the conference folks, and you'll get in queue. And if questions pop up as we're having the dialogue, please submit those, and we look forward to the Q&A session during the latter part. I'd like to open up with just a quick overview of what it means to be an investor. There's a few different asset classes out there. You can be in the venture capital space, which means you're investing very, very early stage. You can be on the debt side, which generally means you're at a bank where you're providing debt financing or loans to a company to help them scale. You could be doing growth equity, which means you're investing in a company that has a growth trajectory that you want to back. And you could be doing private equity, which means you're acquiring a company and helping it scale. So as an overview, there's a few different places that you can play as a investor. It really depends on your risk-reward equation and your interest. So that's a brief overview on the different types of asset classes. I'd like to open up first with a question for Erika about how capital markets work and currency flows into different investment classes.
So first of all, bankers, investment advisors, consultants, analysts will all like to make you think it's more complicated than it is. All right. The one thing you need to know is about interest and interest rates, and that's it. Then you're there. Discounted cash flows. You're done. Now you got to think about how you want to align your values and your priorities with your money. All right. And our job, Cornerstone Capital, is an impact investment advisor. We're about moving money towards impact. All right. And the timing is so good that we have so many forces in the capital markets that are driving change. Capital markets are kind of messed up right now. Capitalism is not doing what it was meant to do, but we can make it happen. So what you need to know is that every piece of the capital markets is in motion right now. Asset owners, that's most of you. Asset managers, that's a lot of you. All right, investment banks, exchanges, accountants, lawyers, the academics, the measurement and ranking entities. All these entities, these pieces of the capital markets are in motion now for transparency and for impact. All right, but we have a long way to go, but we're going to get there. And the key thing to know is that there is this myth still that when you invest for impact, you underperform in terms of financial returns. That myth is exactly that. It should be dead, and all the empirical evidence shows us that. Second myth, all right, is that you're breaking a fiduciary duty as an advisor if you integrate environmental, social, and governance factors, ESG. That's a myth, and it should be dead, and we're getting there. So the bottom line is, think about what you want to achieve with your money, all right, with your intentionality, and then talk to an investment advisor. And what I would say is this group, you're more aligned than anybody. And if each of you is not investing your money sustainably and with intentionality, then we've got a problem. So ask yourself that question, because we can do it, i.e. change capitalism for good if we use every dollar for impact.
Thank you, Erika. Emily, Ultra Capital invests in infrastructure. So if you could briefly explain what that means to invest in infrastructure. And then number two is, when you do get a proposal for an investment in infrastructure, what do you generally look for in order to feel comfortable and feel excited about making that investment?
So project finance and infrastructure investing is a bit of a different animal than most of the other investment tools. And I'd love for all of you to walk away with a really clear understanding of what this tool is and how each of you can use it, from whether you're a brand or an emerging company or R&D or policymaker, how you can harness this to really usher in the infrastructure that's needed for the circular economy. So what we do is we invest not in companies per se, but in physical infrastructure that has a positive environmental impact. So this is the brick and mortar, very heavy infrastructure. It's the brick and mortar that underpins all of what we're trying to do here. So examples might be wastewater treatment to get water back in circularity, recycling plastics. It might be manufacturing a bio-based chemical or organic waste to fertilizer. There's a lot of amazing applications for this type of capital. And we make our return not through sort of build it and flip it, but we make our return through the operating cash flows of that infrastructure itself. So if you can imagine, sort of for every project, there's some input, there's a black box in the middle that converts it to something else, and there's an output. And that infrastructure operates like a business. There's a fee for processing the waste, there's an end product that's sold, there's a service fee for the service that it's providing. That's how we make our return. And we do that over a fairly long time horizon. So when we look at an infrastructure investment, we're looking at, is the technology proven? It doesn't need to be widely adopted. And in fact, a lot of the work that we're doing is investing in technologies that have been commercially proven, but maybe only have 1 or 2 commercial deployments. We're looking at opportunities where there's a lot of predictability in those cash flows, where we can say, okay, we know through these long-term agreements, there's gonna be a supply, there's gonna be an offtake agreement. And that there's a really strong operating team in place, because we, as the long-term asset owner, along with the project developer, we're really aligned with a lot of the stakeholders, the folks who are buying that product, relying on that infrastructure, and the folks who are running it also.
Yeah. Thank you. Erika, you have decades of experience investing in public equities. Could you talk a little bit about what that means, number one, and then where you see opportunities from a public equity standpoint when it comes to circularity as well as impact investing?
So with regard, I just want to give a moment about the scale of the problem we've got, all right? To give you context when it comes to alternative energies. Last year, about $500 billion went to investing in alternative energies, right? We need about $1.5 trillion to get anywhere near the Paris Agreement, all right, a year. So we have a huge deficit, and that's the issue. That's just energy, so think about everything else, food and waste and everything else. So trillions and trillions is what we need to move, all right? You can't move that much money with just one asset class, all right? You have to use every asset class, in particular, equity and debt, public equity and debt. So when we look at a single company, and some people would argue that you can't do impact investing with public companies, we entirely disagree. Not only can you, you have to, you know? So why would you not stay at MGM, as an example, rather than someplace else? Every dollar you move matters. So you want to see not just the best public companies, you want to see them raise the bar for everybody. And solutions come from everywhere. And we talk about systems, all right? So the systems that we have incorporate the beliefs that we have. Systems are hard to change. So you have to decide, okay, am I gonna blow it up, or am I gonna try really, really hard to change it? Given where we are in the global economy, I think we have to try really, really hard to change it. All right? So when it comes to investing in public companies, sometimes it's best in class. Sometimes it's looking at companies like Unilever that have kind of skunk works, different things that they do, whether it's with Ben & Jerry's or Grayston Bakery. But you have to look at the public companies to move the trillions that we need to move. The issue we have in sustainable and impact investing is that it's become like a thing, and so what we're seeing is a huge kind of uptick in products, in investment vehicles, in public equities, and a lot of them, frankly, are marketing. So you have to be able to delineate between the ones that are really getting done something and the ones that are using it for marketing. That's partly what we do. We've diligenced hundreds and hundreds of asset managers. So it's a big ask that we have of every single investor to invest in best-in-class in public equities, companies that understand catalytic capital.
So when we were prepping for this panel, this topic is so robust that we came up with a long list of questions and discussion topics, and so we could probably keep going here for another 2 hours, but I want to make sure that we open it up to the group in the few minutes we have left, just to see if there's any questions from the group that you would like to ask. Anything come up that's...
First off, I'd like to just remind everybody the best way to get us questions is through Twitter and tweeting #Circularity19 or at our handle @GreenBiz.
Yeah, so we have one thing that's bubbling up, and it has to do with a comment that Joel made yesterday about circularity being very local. So systems are very local, the solutions are very local, and the question has to do with where geographically you see these investments making sense right now, specifically established economies, so like systems in the United States, which we know is creating a lot of this stuff, versus in emerging economies where you could have a real impact on the economy and make it, to your point, Erika, this part of the system from the beginning. So that's one of the questions that's bubbled up. Love to hear the panel address that.
Sure, my answer is yes. Okay? So it's not either or, we need all of those things. And they're different tools for different issues and solutions. For Ultra Capital and project finance, we focus in North America, and we're focused on decentralized infrastructure, so small-scale project finance under $100 million that allows small-scale infrastructure to be built regionally to serve regional needs. And so I think there's a lot of different tools that can be used to localize impact, but those tools need to be bioregionally appropriate, just like the solution and the technology and the raw materials also need to be taking into account the cultural factors and the environmental factors in that region.
So I'm just going to add, I'm going to make a case for globalization. I absolutely agree with what Emily said, but when you think about high-functioning systems, all right, they are optimizing the communication among the pieces, right? That's really, really important. And we have examples. I mean, this is, painful to think about, but, the most horrifying systems. I mean, think back, the system of slavery, all right? It was in place for such a long time, and it's because the entities, the people, were kept apart, right? They didn't communicate, and that allowed for a horrifying system to stay in place, all right? So optimal systems means that we need to get all the pieces working together, and that's how you get real change. From I don't do kind of good and bad that much, but in some cases there is clear evil. And arguably, if we look at financial capital, human capital, natural capital, a broken system that we have now, is evil, all right? It's not allowing us to get towards any of the Sustainable Development Goals. So, I'm for globalization, but absolutely, you need both.
As a follow-on to that, if you could each touch on the role of moving from commitments to long-term contracts. So you see a lot of corporations that have come out with really ambitious commitments. Maybe, Erika, if you could talk a little bit about the importance of moving from commitment to actually long-term contract. And then maybe, Emily, if you could talk about the impact on you from a diligence and being willing to invest standpoint if you see long-term contracts in place.
So from a corporate vantage point, when we talk about corporate sustainability, all right? And the idea of making commitments. Commitments don't mean anything. I'm from a Wall Street trading floor, but I'm not going to use the language I usually use. So commitment doesn't matter unless you have incentivization, consistency, accountability, auditability. Commitments are all very nice, but show us. And so I have to tell you, there are certain large asset managers out there. I'll give you a name, Wellington. Wellington is so good on integrating ESG systematically and giving us global sustainability funds, but they don't talk about it. You know, when they do resolutions, they don't talk about it. They just do it. And then you have a whole bunch of firms that talk a lot about it, but aren't doing it, right? So you got to dig deeper when it comes to saying, I'll commit to this, you know, do it.
So I build infrastructure, and I feel like I should be building myself a soapbox to talk about long-term contracts, because they are truly the lifeblood of project finance. And I think folks don't realize how catalytic they are. Because essentially what project finance is doing is it's offering you a trade. For a large corporate or other creditworthy counterparty, they're saying, we'll invest the capital. You don't have to put your balance sheet towards this. You can put your balance sheet towards other core priorities. And you can offload the risk, the performance risk, to this infrastructure project. And we'll fund it. We'll put that $70 million in. We'll fund it. We'll take that performance risk. But we need, on the other side of the table, somebody who says, if that facility is performing, if it's producing to spec, we'll be there. We'll be there to buy that product, and not just next quarter or next quarter after that, but 5 years down the road, 7 years down the road. And so I urge you to think about not just what we're buying, but how we buy it. Because that type of change, that systems change that Joel talked about yesterday, that applies here. And if we can enter into long-term contracts, service agreement, waste supply contracts, purchase agreements, it is truly catalytic to use project finance to get these emerging technologies out off the shelf into widespread deployment and adoption.
Thank you. We're running towards the end of the panel, and I want to make sure we stay on time. So I want to thank our two panelists. I've worked with both of them for a number of years. They're a tremendous resource for inspiration and insights. They're going to be around the rest of today. So if you see them walking around and you're interested in the topic, I highly recommend going up to them and talking to them and getting their contact information. And I'm sure they'd be open to both hearing from folks about your ideas and whatever questions you have. So thank you for your time today, and please give a round of applause to our panelists.